And you know what, to be completely honest, a lot of people do lose all their money in crypto. It can be very scary. It's full of fraud and scams. And for the first time in all of this cycle of Bitcoin, you have institutional money flowing in. And now you have financial advisors able to sell it for the first time. You have it available in people's 401ks for the first time. You have really serious hitters in finance telling their clients they should own it as part of their portfolio. So the theory is if I can continue to buy it and own it for a long period of time, if it's trading at $100,000 today, which most people think they missed out on the bull run, he's saying we're nowhere close to it. He's saying by 2050, it could be as much as essentially $13 million for one coin. Everybody's asking me about crypto, and so I thought I'd make a video breaking down where it fits in retirement. So every single person I've worked with lately has been asking me about crypto. We have a new president. We have him appointing a head of the SEC who's very pro-crypto. They're seeing it on the news. They're seeing Bitcoin hit new all-time highs. Everybody's asking me about crypto, and so I thought I'd make a video breaking down where it fits in retirement, because a lot of my clients that I serve and people I sit with in front of every single day are between ages 55 and 65. And so to them, it seems like a scam. It seems like some fairy tale thing that's made up where they're going to lose all their money. And you know what, to be completely honest, a lot of people do lose all their money in crypto. It can be very scary. It's full of fraud and scams. And it's very dangerous, and I don't recommend you getting into it really at all. I think that's important. Is like I'm not going to sit here and recommend using crypto. However, what I'm going to attempt to do in this video is I'm going to try to create a framework that you can think about crypto in if you're in retirement or approaching retirement, so that you can make good decisions when you watch the news, you see this stuff on TV, and you can start to learn more and get informed about it. So it's not so mysterious and scary, but it's something you can actually embrace and start to feel confident over. So let's start with crypto. A lot of people go, well, what is it? The first thing everybody asks me is it tangible? How do I know I own it? Is it even real? Well, let's look at money for a second, okay? Look at any fiat currency, right? Our dollar bills are worth something because we say they're worth something. The piece of paper itself is worth very little. But because it says it's worth $1, it's worth $1. And you can transact and you can negotiate that dollar for goods and services, and that's how money works. You transfer value. So it's not actually worth anything, but we assign it value. Cryptocurrency is essentially a ledger. It's a blockchain, which is a ledger of code. Okay, so when they create these different coins, they're creating a code. So it is real because computer codes are real. That you have computer codes and they tell you, all kinds of things all the time. And so this cryptocurrency is essentially just code. So when you own a Bitcoin, you own, essentially, you can think of it as a piece of this code. And so you have something that's real. It's not tangible, it's digital, but think of it like gold. It's more like a currency. So again, there's a finite amount of gold. And so the more people that want the gold, the more valuable it becomes. The problem with dollars, and the reason why everybody's frustrated with dollars right now, is inflation. They have the ability to print more dollars. Well, if you just print more dollars, everybody knows that makes our dollars worth less. And so the more they print, the more they're basically essentially forcing this phantom tax on us by making goods and services more expensive because they're putting way more dollars out in the economy. The reason why people are flocking towards crypto is the idea behind it is it's supposed to be a free and sovereign currency. Nobody can manipulate it. No countries can wield it over each other. There's no reserving it. It's essentially just going to be a free, fair transaction where anybody can essentially just transact instantly, as long as you have, a smart contract or a way to transfer it between wallets that's secure. And so that's why people like it, is they can't manipulate it, they can't inflate it. In fact, it's more like gold in the sense that it's finite. And the more people that adopt the system, the amount of new wallets that are opening every single day is crazy. I think I've seen different numbers in different articles. I think it's somewhere around 10,000 new wallets coming in every single day. So more and more people are adopting it and using it. The other things you have, going for it right now, it has a really, really strong narrative. You're seeing it in the news. You're seeing it in Google searches. There's this thing called Bitcoin dominance when, Bitcoin hits all-time highs and is, being put out in all the media and all the news. And for the first time in all of this cycle of Bitcoin, you have institutional money flowing in. So you have these spot ETFs that were approved, and now you have financial advisors able to sell it for the first time. You have it available in people's 401ks for the first time. You have really serious hitters in finance telling their clients they should own it as part of their portfolio. Larry Fink, the CEO of BlackRock, said you should have 80% of your money in crypto, which is insane. BlackRock is one of the largest, asset holders in the world, and their balance sheet's in the trillions. So it's really reaching a point where more and more people want to learn about it, but they're worried because it is very, very risky. It's a speculative risk. I mean, you literally can lose all your money. And when you're in retirement, you're much more risk adverse. You're at a point in your life where you don't have as much time to make up losses. Your time horizon is much smaller, therefore, theoretically, your risk capacity is much smaller. You can't take a chance with your money. So then you go, well, where does it fit in retirement? How does it make sense at all? I think it's important to have a good framework when approaching crypto to understand where it fits for you. So I'm going to attempt to lay one out for you. And again, I want to be fully transparent. I'm not selling any kind of cryptocurrency wallet or course, or I'm not trying to tell you to buy a certain coin that I own. None of that. I literally just want you to have the information, and I want you, more importantly, to walk away from this video with a framework that you can think about crypto within in terms of how you might own it. So this is how I look at crypto, and this is how I've been able to be very successful. I've traded it for 3 cycles now, and I've made a lot of money with crypto. I've also lost a lot of money, but it's something that's become a very, very real part of my life. And the way I position my crypto is this. I look at my assets, and I pick a portion of my assets that I could lose, and it would not change my lifestyle. Now, for you, that could be different than me, right? I'm in my mid-30s. I can allocate a larger portion because if I lose a larger portion, I have plenty of time to make it back up. It's not going to impact me as highly. But for a lot of people in retirement, that portion probably should be much smaller based on your individual needs. Tom Hegna, one of the most brilliant economists when it comes to the subject of retirement, says a 1% allocation is enough to have the exposure you're going to want to have that gains and not feel like you're missing out and be a part of it, but it's not going to bankrupt you if you lose 1% of your money. For me, it's a much larger portion, so it just depends on your risk tolerance. So let's say, for example, you could allocate 10% of your portfolio to Bitcoin. Well, Michael Saylor, who's one of the foremost authorities on Bitcoin, and his company, is basically, they're saying he's created an infinite money glitch, because what he's doing is he's borrowing money at 0% and buying Bitcoin, and the stock price is just going up through the roof. So his stock is called MicroStrategies. That's the name of his company. And so what Michael's realized is he's saying, look, Bitcoin will go to 13 million one day. So the theory is if I can continue to buy it and own it for a long period of time, if it's trading at $100,000 today, which most people think they missed out on the bull run, he's saying we're nowhere close to it. He's saying by 2050, it could be as much as essentially $13 million for one coin. So that is a massive multiple on that money. In fact, 12 years ago to this day, Bitcoin was trading at a penny. Now it's worth $100,000 a coin. So it's obviously growing in value significantly. So it's common for people in the crypto space to 2, 3, 5, 10x their money. Now, I've owned stocks for a long time. I think it's a good return if you get 10 to 12% a year on your stocks. But I've never had a stock 5x on me. I mean, you have to be very, very lucky for that to happen, or you have to be a very skilled investor for that to happen. But in crypto, it happens all the time. And that's why they're talking about having it as a part of your portfolio, because that exposure, for some cases, can have a massive difference. So here's the framework. Let's say you put 10% of your money into cryptocurrency. And let's say that 10% is, of your wealth is $50,000. Let's say your net worth outside of your home is $500,000, and you put 10% in cryptocurrency. Let's say you've done the other proper retirement precautions of creating guaranteed lifetime income, a plan for long-term care, a plan if your spouse dies. You've transferred these other risks, maybe using insurance products to be able to do that. And this is the amount of money you have to grow. So you're going to be putting it into something that can appreciate in value. Traditionally, that would be equities or real estate. But now we're going to look at crypto for a second, okay? But obviously you don't want to take too much risk where you could, lose all of that money. So let's say you carve off 10%, that's $50,000. Well, if you lose that $50,000, you have all your other bases covered. You don't really need that money to live on at all. It's going to have a much longer time horizon since you don't need to draw income from it. So theoretically, if you lost 10% of it, you'd have some time to make that 10% back, and overall, it wouldn't impact your lifestyle. However, if that $50,000 does a 10x, you will make $500,000. Now, a lot of people hear that and think that's just absolutely crazy. That's insanity. Of course, if anything 10x would be amazing, but what's the reality of that? It happens every single day. Crypto has these communities online of people that are sharing information, and you have to be very careful because a lot of them are fraudulent and they're trying to harm you and they're trying to sway you into some type of scam. But if you pay attention to some of these people talking online on X and YouTube, you're going to find people that are giving you recommendations of coins and projects and things that are really actually going to do very well. And you can basically use a process to kind of group a lot of these different people to try to figure out who's saying the right things for the right reasons. So for example, if you have people that are all talking about a project and you're seeing it in different places from multiple sources, that might give you more credibility than, one person talking about a very obscure project and come to find out they own a ton of it and they just want to dump on you and sell theirs before you get a chance to sell yours. So there's a cross-reference ability online where you can actually see these people talking about these coins and these projects, and you can kind of get a sense of, which one might have a higher probability. Now, that's not foolproof, and nothing's guaranteed. In fact, it's extremely, extremely risky, and I'm not telling you to do it. But with my strategy, that's how I pick my coins. And so I don't know these projects. I don't know, I don't know how to research blockchains and do all that kind of in-depth studying. What I do know is I do know how to pay attention to people that are smarter than me. I know how to follow people for long periods of time. I learned how to see if their track records actually play out. I learned to see what their reputation is over a long period of time, years. And then I feel more comfortable in the projects that I participate in and put my money in. So you can definitely have a 10x. If you look on CoinMarketCap, there are plenty of projects that have 10x since we've been in this bull run, since the last downturn. And a lot of people are just misinformed about crypto. A lot of people that I talk to think that it's just crashed and it's completely worthless, when it's at all-time highs right now. So I think it's wise to not speculate or talk about or make decisions on things if you don't fully understand them. Like if you're a person right now that thinks that crypto has lost everyone's money, you're misinformed about what's happening in the market currently. Now, depending on when you're watching this video, it may have crashed. And yes, it can crash 90%, which is extremely volatile. That's very scary. So that's why you don't want to have money that you need to be able to live on in crypto, especially in retirement, or money that you're going to need in the near future. But again, if you go to that scenario that I gave you, that framework of somebody that doesn't need that money, they can let it grow for a long period of time, they can allocate 10%, you can have a life-changing game. If you double your money in a short amount of time, $500,000 could buy a second home. You could fund colleges. I mean, you don't need me to tell you all the amazing things you could do with $500,000, but the potential is there, and it's very real, and it's powerful, and you have a lot of institutions, you have governments, you have states that are all passing legislation to start reserving in Bitcoin. What's been one of the biggest challenges for the states? States can't print money. The federal government, they can literally print forever, infinite. They can just keep going. But the states don't have that ability. They have to balance their budget. So if you're a state and you're watching what's happening with the federal government, do you want to store your wealth into dollars that go down in value or crypto that goes up in value? And so that's why you're seeing this really compelling narrative for institutional money for the first time to flow into this asset. And if we look back at the last decade of the stock market and we go, okay, when 2008 happened, what did they do? They passed TARP, they put stimulus into the market, and for the next 10 years, they pumped hundreds of billions of dollars in the stock market every year, trillions by the end of money they propped up our economy with by buying financial assets. Well, if you buy financial assets and then the government comes in behind you and buys up the rest, what's that going to do to the price of yours? It's proven that stimulating the economy is code for things are going to go through the roof if you hold financial assets. Well, what are we looking at right now with cryptocurrency? We're looking at very early adoption where the big money hasn't even come in yet. So a lot of people think, oh, I missed it. It went from 12,000 to 100,000. I should have put it in when it was 12,000. And what a lot of people out there that are a lot wiser than me are saying is, it's just getting started. Now, it depends on the time frame you're looking at. And if it goes down by 30, 40%, which is highly likely and very possible, then you're going to go, oh, what a mistake I made. I just lost a huge portion of that money that I put into it. But again, I'm talking about 2050, right? So we're talking about a much longer time horizon. So this needs to be money that you can afford to lose and you do not need. And if you have those two components and you have some good guidance from people that you trust, you can do very, very well in this space. And so that's all I want to present to you as a different way to think about this, maybe a more common sense approach, a lot of, eliminating that negative rhetoric that you get from the news and different people you hear about this from. I mean, everybody at this point probably has somebody in their life that's made a ton of money in crypto and lost a ton of money in crypto. Okay, so it just doesn't seem like it's very real, or it also can be very intimidating and very scary. There's also a bunch of other layers to this, right? You've heard of things like blockchain and DEXs and swaps and all these different ways to trade it. Again, I think if you're starting out, you want to just start on one of the most secure platforms, which I think is Coinbase, and you just want to focus on, the top 100 coins, because you don't want to get overwhelmed or stop yourself from making progress because you're trying to learn how to trade some obscure coin through a swap online. That's very complex. That's a much more advanced maneuver that you can build to after seeing it for a couple cycles and really starting to pay attention to the right sources. But if you're just getting all your information from the mainstream media and you're taking that and that's how you're forming your opinion, you're not actually doing any research yourself, you're going to be misinformed and you're not going to have the right information to be able to take advantage of this opportunity properly. So that's my framework to think within. What I put in is an amount that I could lose, but if it hit the right multiple, it wouldn't retire me, but it would be life-changing. It'd be an amount of money that I could do a lot of good with for my business, for my family, for my community. And that's my strategy on crypto. I think it's valuable to have the exposure, but you want to have guardrails on it and do it the right way. So if you want more information about cryptocurrency, I got a chance to sit down with the most successful crypto trader that I actually know in person. This guy retired by age 44. He's made millions in crypto. And I got a chance to interview him. We did a crypto 101. So if you want more content like that, click on that video, watch that right now. As always, I hope to see you really soon.